Today we're looking at an analysis report, Forget China, How USAR is Solving the Rare Earths Crisis, which details USAR's plan for a full mine-to-magnet supply chain.
It's a really critical thesis. The report does a great job laying out the three pillars: the Round Top mine, the LCM processing acquisition, and the Stillwater magnet factory.
Exactly. The core story is there, but we want to push this from persuasive to, well, bulletproof. So let's jump right in.
Let's get into the mechanics.
Okay, so our first area of focus is operational realism. The analysis report's assessment of operational risk must be commensurate with the complexity of building three simultaneous vertical pillars.
And that's really the heart of the difficulty, isn't it? This isn't a linear project.
Not at all. It's more like synchronized choreography.
And building three projects of this scale at once, with all the permitting, the engineering, the risk just scales up exponentially.
It does, and the report paints this very elegant picture, this seamless integrated solution. But the tone feels overly optimistic.
Aspirational, maybe?
Aspirational is a good word. It treats this aggressive timeline. Full extraction at Round Top by 2027, while the Stillwater magnet factory is supposed to hit commercial production in H1 2026. It treats it like it's a done deal.
Right, and I agree. The report, it does note the company's impressive financial position, over $300 million in cash, which is obviously a huge plus for a pre-revenue company.
Of course.
But cash alone doesn't solve scheduling friction. The sheer difficulty of coordinating the technical team from LCM with the civil engineering at Round Top, while also commissioning the factory at Stillwater. A straight-line path seems, highly improbable.
So the report sees the ambition, but doesn't really plan for the inevitable delays, the technical hurdles that always plague these kinds of projects.
We need to see more resilience. So to elevate this analysis from aspirational to credible, it has to have a focused section on mitigating these critical path delays. Investors need to see the plan B.
So if they have the cash, how does the analysis show that it's actually being used to minimize that risk, and not just sitting there as a buffer?
That is the key question. For instance, the analysis should model a specific likely scenario. Let's say Round Top's permitting gets delayed past 2027. It happens all the time in mining.
Right.
So if that primary resource is late, how does Stillwater still hit its H1 2026 production deadline?
That gap needs filling.
Exactly. The report should detail how the plant would pivot. Could they tap into LCM's old supply network? Could they temporarily source refined oxides from, say, an ally like Australia, just to keep the factory running and meet those first orders?
That shows operational maturity, not just a plan on paper.
And it addresses the supply side. But what about the manufacturing itself? Advanced magnet production is notoriously hard to scale up.
Yeah, good point.
So on the manufacturing side, we need clarity on that $300 million cash runway. Scaling from a pilot to 5,000 metric tons, you're going to hit technical hurdles, yield issues, purity problems, equipment bottlenecks.
Always.
So the analysis becomes far more compelling if it details the specific capital allocation earmarked for that. Show us the technical contingency fund. Prove that Stillwater's target is achievable even with overruns. That turns a generic cash number into a strategic risk management tool.
Excellent. Okay, so we've covered the how. Now let's talk about the payoff, the whole national security angle. Once it's built, what's the actual impact?
And the report is good here. It sets up the urgency really well. China's chokehold, the F-35, nuclear submarines. The problem is crystal clear.
But the connection between that huge national priority and USAR's specific solution is, it's a bit too abstract right now.
It's fuzzy.
Yeah, the report gives us the capacity, 5,000 metric tons a year, but it kind of leaves the reader to do the math. The big question is just hanging there. How much of the U.S. defense or industrial need does 5,000 tons actually cover?
If you don't quantify that, the whole national security priority label feels like an assertion, not a fact. It's like saying it's big and it's important, but without any sense of scale.
Is it 10% of the need, 50%? We have no idea.
Without that benchmark, you can't really grasp the significance of the project. So the analysis needs to benchmark that 5,000 metric ton target against quantifiable strategic deficits.
Right. You have to translate the tonnage into strategic value.
Exactly. So instead of just saying 5,000 tons, reframe it. Say something like, this volume is sufficient to supply 20% of all permanent magnets required for US-made EV drivetrains by 2028. That immediately anchors the scale.
And what about for the defense story, which is the whole point of Forget China? That's where their unique geology comes in, right?
Absolutely. And this is where the report is sitting on a gold mine and not fully digging it out. It mentions the inventory at Round Top, the high concentrations of heavy, rare earths, your dysprosium and terbium.
So why are those so much more critical than the more common light rare earths?
Because they add heat resistance. It's that simple. Your standard neomagnets lose their power at high temperatures.
And military gear gets hot.
Very hot. Guided missiles, sensors and fighter jets, motors and submarines, they all need magnets that work perfectly in extreme heat. And those heavy rare earths are the key ingredient for that. They're also the ones almost exclusively sourced from foreign refiners right now.
I see. So it's not just about the amount of magnets, it's about being able to make the specific type of magnet that the DoD desperately needs.
Precisely. And the report has to hammer this point home. Detail how having 16 of the 17 rare earth elements at Round Top directly solves for the most critical, currently captive military supply chains. Show that USR is solving the quality problem, not just the quantity problem.
That gives their 5,000 tons a strategic weight far beyond just the raw number.
It makes the asset an undeniable national priority. It's a much sharper argument.
Okay, less a powerful distinction. So let's move to our third and final critique, which is about the competitive landscape. This ties everything together.
The Western Hemisphere moat.
Yes. And that concept, it needs a much more rigorous defense against the inevitable cost competition from overseas.
The analysis leans pretty heavily on the forget China idea and this notion that vertical integration, plus things like IRA compliance and DoD support, that's enough to create a moat.
And look, the demand for non-China sourcing is real, it's growing. That part is true.
Right.
But the report doesn't fully wrestle with economics. China's 90% dominance isn't an accident. It's built on decades of scale, of state subsidies, of massive cost advantages. And while the report projects Round Top will be a lowest cost resource, which is a very bold claim for a new mine, it doesn't really explain how the final finished magnet from USR is going to be cost competitive. Even with a strategic premium, relying on policy alone is a weak foundation.
The moat has to be built on industrial efficiency, not just government preference.
So what does that look like?
We need a dedicated section detailing the specific advantages of their integration. It can't just be about insulating from export bans.
How does owning all three pillars actually lower their costs or improve their margins compared to a global competitor? It has to be more than saving on shipping.
It has to be true industrial synergy. So, for example, clarify the synergy from the LCM acquisition. How does owning the alloy processing step streamline the metallurgy for the Stillwater factory?
Okay.
Does it let them cut lead times from months to weeks? Does it improve their magnet yield rates? Maybe it reduces energy or chemical inputs because they control the purity of the alloys from day one. If vertical integration gives you a 10% efficiency gain in that final step, that's a real competitive advantage.
And if they still can't compete on price for, say, a generic industrial magnet?
Then the argument has to pivot back to that high-value proposition we just discussed.
To the heavy rare earths.
Exactly. If USAR can't beat China on price for a standard magnet, then the strategy has to be about irreplaceable value. The writer should argue that their unique resource at Round Top lets them produce a superior, premium-priced magnet for aerospace, for defense, for advanced robotics. Places where performance and provenance justify the cost.
That makes them functionally irreplaceable in those high-value markets. It strengthens the entire Western Hemisphere moat concept.
It gives the forget China theme real sustainable economic teeth. It's not just about where it comes from, it's about what it can do that others can't.
This has been a really focused review. And I want to be clear, this is an already strong analysis report. The writer obviously understands the stakes here.
Oh, absolutely. The material is excellent. The expertise is clear. The foundational thesis is robust. All we're doing here is hardening the analysis against the kind of scrutiny it's going to face.
So, to summarize the three big opportunities we've identified. First, move beyond the optimistic timeline. You need to rigorously model the operational risks of the simultaneous scale-up.
Show us the contingency plans. What happens if Round Top is delayed or Stillwater hits a technical snag?
Second, quantify that 5,000 metric ton capacity. Benchmark it against the real national need. Translate that volume into tangible impact, especially by leveraging the high-value heavy rare earths for defense.